Ladies and gentlemen, this one, we have 3 Power Pack presentations. We would love to have a combined conversation with all of you, of course, with question and answers. So for this, of course, we will request the speakers to please limit their speaking time to about 15 minutes so we can take some questions in the end. Next up, in our 5th session, our topic is Cross Border Innovation Arbitrage. What can Pakistan learn from other markets? And this we say in the context right now, we've seen the Pakistani rupee made some great recovery in the last 1 week as it has gained 4% of its value back and has been identified as one of the best markets performance and forex currency performance in the region and in the world. So let's see what other lessons are out there. We have the general partner, SOSV, and the managing director, Orbit Startups, as our next speaker. Ladies and gentlemen, please welcome Mr. William Baubeen.
So we're going to talk a little bit today about what we can learn from other markets and bring to Pakistan. So we call that innovation arbitrage. I think there's been a lot of success in, of course, the U.S., but also China. But we also don't want to we want to take the success, but we don't want to take the same mistakes. So by way of introduction, we're Orbit Startups. We are a global investment platform. So where we invest, we help companies through our program, and then we invest again. So we are part of SOSV. SOSV is a VC fund investing in 3 areas: hardware, biotech, and internet and software. We have 1.4 billion US dollars in assets under management, just went up by 100 million in the last 2 months. And we are the most active early stage VC, venture capital investor in the world. We are number 4 most active VC in the world, number 8 US, number 3 Europe, and number 4 in Asia, rest of world. That includes Pakistan. So within Pakistan, according to Magnet, we are the number 2 most active VC in the country of Pakistan, and we are the most active international VC in Pakistan. We started investing in 2019. In the last 2.5 years, I've invested in 16 companies here. I'm very happy to say this is my first trip to Pakistan, so I managed to be the most active international investor in Pakistan without ever actually being here. Okay, sorry, there we go. So we're going to talk a little bit about technology today. And so people think about technology as a sector or as maybe a solution to all their problems. But we actually first start with the problem. We don't start with the technology. Okay, you start with the problem, or we can start with the opportunity. And then, once we understand the opportunity, we think about what that solution is. And sometimes the solution is not tech-driven, but a lot of times for our investments, we are taking a technology-driven solution to a problem or opportunity. And so what we're thinking about for Pakistan are new ways of doing things. Many of the ways that things have been done here have been the same for 1,000 years, 2,000 years, who knows? But there hasn't been a lot of change. And what we're looking for here is technology-driven change, okay? We are going to create a revolution in this country and turn things upside down. So what can we learn from other markets? The first is trust. There is a very low sense of trust in Pakistan. One of the major challenges that we saw is that when people go online and they buy a phone, a lot of times they get a box with a rock in it. If you try and buy a laptop, a lot of times you get a box with a rock in it. So how can we use technology and marry that with trust in order to make the market more efficient? So we invested in a company called Priceoy. Priceoy, we're the first VC. We invested about a year and a half ago. Priceoy is the number 2 e-commerce platform in Pakistan. And they guarantee that you're not going to get a rock. That's their one promise, no rocks, right? If you buy a phone or if you buy a laptop, when you open it up, you will actually get what you ordered. And it's not going to be some a cell phone that got smuggled over the border and it didn't pay, the tax fee, the tariff fee, so that in 6 months the telco just turns it off and bricks it, right? It's going to work. And so this is a very basic change that technology is driving in the market, but it allows people not just from Islamabad or Lahore or Karachi to get product. It allows people from the tier 2, tier 3, tier 4, the villages, to get the goods and the services and the technology that they need to change their lives. The second lesson that we brought from China and from Indonesia and even from India is the local agent model. Okay? So advertising online is really expensive. In fact, it's almost impossible to make money if you advertise a service online in Pakistan. The ROI is almost always negative. Where is the most trust in Pakistan? What we found is the same as in China, the same as in Indonesia. It's in the local shops, the local mom and pop shops. When you drive around, those local people selling things on the side of the road or in the local markets. They have the trust. They see the same 100, 200 people, 250 people every week. And sometimes it's not just them. It's their parents and their grandparents going back generations selling to their local community. And so we're leveraging that community to help them make a better living. So we invested in 247.pk to help them launch Apni Dukan. So Apni Dukan takes these local mom and pop shops and enables them to become modern, digitized retailers. Not just selling physical goods, but also selling digital goods so that they can make money while they sleep. We are very much focused on digitizing these small businesses. I think there's about 11 million of them in Pakistan. That's 11 million families. Assuming 3 or 4 people per family, it's like 40, 50, 60 million people and their livelihood. So we're digitizing them, giving them the tools through their smartphone to have a better business. And in the process, we're cutting out all the middlemen. We are actually removing every single middleman from this market. Dastagir was one of our first investments in the market. So Dastagir basically takes out the entire supply chain for these small vendors, delivers product to them so they don't have to go buy in the local market, and then gives them financing so that they don't get stockouts and are not away from their store. So this company has gone from 0 to almost 200,000 small merchants in about a year, unfunded. And last month, they closed $39 million US dollar Series A, the largest Series A financing in the history of the country of Pakistan. Ledger, or a kata, it's an accounting system. Now, in India, you had Kata Book, raised a lot of money. Everybody thought they were going to be the darling, but Kata Book failed in India. Because in India, it's very different than Pakistan. In India, people pay cash, and they walk away from those mom and pop shops, or the small businesses, or the small traders. But what we found out in Pakistan is that most of the transactions, the vast majority of transactions in Pakistan are driven on credit, both credit to the seller and the seller giving out credit to the local consumers. So some of our vendors, 95% of their sales, 95% of their supply is on credit. So we invested in Digikata, the number one kata, the number one ledger in Pakistan. In just 3 months last year, they went from 300,000 active merchants on their platform to 1 million. Okay? Since then, they've doubled it again. They're the number one kata in the market. Now, we don't charge for this software. We give it away for free. Because why? We're processing and tracking over 3 billion US dollars of transactions a month in Pakistan. And that data is valuable. And there's many ways to make money. Logistics, well, this, again, it's about trust. How do you make sure that when somebody buys something, the right product gets to them? It needs to get there, and it needs to not be a rock, right? So we invested in 3 logistics companies. Intercity for large containers, lorries. Move It, which is intra-city, within cities, so small vans like a Ninja van. Lala Move for Pakistan. And finally, InstaWorld. And a lot of the, InstaWorld gives a last mile delivery, e-commerce. So we didn't normally invest in logistics companies, but we found out that it's very important for the product to actually get there. And we can use technology to make this market much more efficient. Our goal is to make sure that there's never going to be an empty truck or an empty van or even an empty motorcycle delivery person running across Pakistan's highways or city streets. The second learning is partnerships. You don't have to do it by yourself. So most VCs, most investors, they invest in one company and they try and grow it. They invest in another company and try and grow it. We think that it's important to partner. You don't want to do it all yourself. So we have partnered with banks like HBL, the sponsor of today's conference, with Jazz, major telco. They have users, they have payment rails, but they don't have services other than traditional, cell phone services. So that's what we're bringing to the partnership through our ecosystem. And the ecosystem is what key. We also partner with the ecosystem. We cannot do this alone. We partner with other VCs in the market, especially local VCs, because we do not actually have a presence on the ground in Pakistan. We partner with the government to the extent possible. It's not easy. And we, of course, partner with conferences and meetups like Leaders in Islamabad. The third lesson, the third learning, is monetization. Okay, and this is key. Traditionally, you make software, you sell software. Okay? But what we can learn from China, what we can learn from Indonesia, is we give the software away for free, and then we make money some other way. There are many, many ways to make money, but it's usually not by selling software. So Orbit Startups itself is a lesson in this. We're a VC. We invest money, but nobody works with us for our money. Almost every single company that we've invested in has taken a down round to take our money. They give us a lower valuation than any of their existing investors or future investors because of the ecosystem that we bring, because our companies cooperate with each other. And this is the innovation. It's partnership. So our 16 investments in Pakistan, they don't have to, they're not required to work with each other, but they do. They promote each other in return for revenue share. And what does this mean? Customer acquisition cost of 0. And that is an unfair advantage. So think about Dastagir. We're digitizing these mom and pop shops. We make almost no money supplying the lentils and the rice and the coffee and the detergent to these mom and pop shops. What we do make money on is financial services, giving them trade finance. For Digikata, we don't make any money by offering the Kata, the ledger software, to the small businesses, to the trading companies. But we, again, make money through financial services and delivery. And for InstaWorld, that last mile deliver, we don't really make that much money on the delivery. Delivery is a really crappy business. Where we make money is providing positive payment terms to the merchants who are sending these deliveries out for cash on delivery. So the merchant gets paid right away, and they have positive or almost positive cash flow cycles versus the competition where it takes as long as 30 days for somebody to get paid for a cash on delivery in Pakistan. That's ridiculous. So some closing thoughts, and I have no idea what the time is because the clock's not moving, so I'm just gonna keep rolling. Technology is not the point, okay? Technology is the means, right? So technology is simply a tool, and it's a tool you have to use, because if you're not using technology, we're gonna replace you. So technology breaks down barriers. So think about the currency. Pakistan has a lot of currency fluctuations, apparently. It has not affected any of our businesses, not at all. Because the problems that we're solving are so fundamental, the currency fluctuations are immaterial. The economy, not really paying too much attention to whether the Pakistan economy is going well or going poorly, because it has not affected any of our companies. their performance. Our companies, on average, are growing 10, 15, 20% month on month. Government, not really going to go there. But again, don't pay too much attention to it. The one thing I would say in advice to any of our government friends who are in the audience, the general idea here is for government to stay out of the way. Take a lesson from China. So China, not recently, but in the past, China would let companies basically do whatever. And they would watch and they would consult. But for all intents and purposes, pretty much anything goes. The only time where government came in is to protect people. If there was a group of consumers or a group of small businesses, or recently a group of all businesses getting killed by the Tencent duopoly and the Alibaba duopoly, then they would step in. But the best thing that government can do is stay out of the way. The second thing, the second lesson for Pakistan is be able to have a choice. I don't think people here particularly enjoyed the first colonization. You know, people in China didn't enjoy it. People in Indonesia didn't really enjoy it. People in India didn't really enjoy it. Why do you want to go through the same process of colonization that has happened in Southeast Asia, in Indonesia, again, where US companies or Chinese companies come in and take over the market? Third is capital. We don't believe in blitzscaling. Okay, we're early stage investors, so we don't have the luxury of writing a $100 million check. I write $200,000 checks, right? So we're not a big fan of blitzscaling. We do not think that money is a weapon, okay? And so one of the lessons here is that when somebody drops a $100 million check on a Pakistani company, you don't have to spend it. In fact, you don't have to take it. Just because people are offering you capital, it doesn't mean that you should take it. If you're spending $1 and making less than $1, it's an experiment. It's not a business, okay? So focus on positive unit economics, build a real business. Again, if you're spending $1 to make less than $1, it's not a business. So we're all about traction first and fundraising later. The key with Dastagir is they raised $39 million because they didn't need the money. They have positive unit economics. They could go profitable whenever they wanted. The $39 million allows them to grow faster, but it's not necessary. Why? Because they have partners. Now, the cool thing is the $39 million came mostly from Jazz. So it's not just money. It's a partnership with one of the leading telcos in the country. So for us, it's not about just one company. It's about an ecosystem. And what we're trying to build here in Pakistan is an ecosystem of local founders, local companies, leveraging international expertise, the tips and the tricks that people in Silicon Valley use, that people in China use, so that you have a choice whether or not you want to be independent or you want to sell out to the Americans or the global internet companies or the Chinese. So this is our portfolio, 16 investments since December 2019. Some of these companies you might have recognized, some are not. They're quite early stage. I mean, again, we are very early stage investors. But we hope that these become the first unicorns to come out of Pakistan, and that these are the companies that replace all the top 100 corporates in terms of value in this country. So I hope I'm not going to regret this, but here's my WhatsApp. And with that, I'm going to cede 2 minutes and 20 seconds back to the conference. So thank you very much for your attention, and look forward to working together. And it's great to be here.